Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of corporate finance, and today we are diving deep into us Physical Therapy Incorporated's latest annual report, which has some interesting numbers and strategies that paint a vivid picture of their growth, especially their expansion through acquisitions. Before we dive in, make sure you are subscribed to the channel, and if you want to get more in-depth analysis on topics like this, join our community on Discord. The link is down below in the description. Alright, so Us Physical Therapy Incorporated wrapped up its fiscal year 2025 with a solid jump in revenue and net income, painting an optimistic picture. The company's total assets reached an impressive $1.2 billion, marking a significant expansion. On the liabilities side, they stand at $433 million. Now, what is really interesting here is the redeemable non-controlling interest, which is at $293 million. This usually relates to interests in subsidiaries that they do not fully own but have agreements to potentially buy out later. It's a common strategy for growth through partnerships, but it also means a significant chunk of their future cash flow might be earmarked for these buyouts. And when you look at the total equity that belongs to Us Physical Therapy Incorporated shareholders, it's about $476 million. Let us jump right into the financials, starting with the revenue. They brought in $781 million in net revenue for 2025. This is up from $671 million in 2024, which is a very healthy 16% increase. They are clearly growing by adding more clinics and businesses. A big chunk of that revenue, about 59%, goes back into salaries and related costs, amounting to $461 million for 2025. This is also up from $399 million in 2024, which makes sense as they are adding more clinics and thus more staff. After covering those operating costs, their gross profit was $149 million, a nice increase from $123 million in 2024. This shows they are managing their costs effectively even as they expand. The gross profit margin also improved slightly from 18.5% to 19.2%. Their operating income saw a substantial jump of 37%, reaching $86 million in 2025, compared to $63 million in 2024. This is a really positive sign, showing their growth in revenue is translating into actual operating profit. And finally, the number everyone cares about, the net income attributable to Us Physical Therapy Incorporated shareholders, was $39 million in 2025, a significant rise from $31 million in 2024. This translates to earnings per S-share of $1.42 in 2025, down from $1.84 in 2024. Wait, that seems a bit counterintuitive, right? Usually higher net income means higher earnings per S-share. Let's dig into why that might be, looking at the details. It seems that while net income grew, the increase in the value of those non-controlling interests, those partnership stakes they do not fully own, actually reduced the earnings per S-share calculation. This is a bit technical, but basically, even though the company's overall profit improved, the accounting for these partnerships made the per share earnings look lower. It is a common accounting dynamic when companies grow through these kinds of structured partnerships. Now, this growth is largely driven by their aggressive acquisition strategy. In 2025, they added 47 owned clinics through acquisitions, a higher number than the 96 they added in 2024. They also closed or sold 30 clinics in 2025 compared to 49 in 2024. Which is a strategic move to optimize their portfolio by shedding underperforming locations and focusing on growth. Their main segment, physical therapy operations, brought in $666 million in revenue, boosted by $123 million from new clinic additions. The gross profit margin in this segment held steady around 19.4% after adjustments, which is quite good for a service-based business. Their industrial injury prevention services segment also saw healthy growth, with revenue climbing 18% to $114 million. Corporate office costs went up to $69 million, partly due to implementing a new enterprise resource planning system. This is a necessary investment for efficiency, but also adds to their overhead. Let's talk about debt. They had about $161 million outstanding on their credit facilities at year end 2025. This is up from $151 million in 2024. While they are growing, it is important to keep an eye on how they manage this debt. The company also highlighted its approach to cybersecurity, acknowledging its importance in safeguarding patient data. They seem to have a structured risk management framework in place and are actively engaged in employee training to mitigate potential threats. While they have not experienced material cyber incidents, they recognize the evolving landscape, and their commitment to robust security measures is crucial in today's environment. On the shareholder return side, they repurchased 81,322 shares of their own stock for $5.6 million in the last quarter of 2025. This shows a commitment to returning value to shareholders and confidence in their own stock. Now, for my take on all of this, US Physical Therapy Incorporated is clearly executing a strong growth strategy. Primarily through acquisitions, the revenue and operating income growth are impressive and demonstrate their ability to expand effectively. Their focus on both physical therapy and industrial injury prevention services provides diversification. The main risk, as I see it, lies in managing the integration of these acquisitions and the associated redemption of non-controlling interests. While these partnerships fuel growth, they also represent future financial obligations. Their debt levels are manageable, but continued vigilance in managing this debt alongside their expansion is key. The improvement in their gross profit margins and operating income suggests efficient operations, but the slight dip in earnings per S-hair, while explainable by accounting, is something to monitor. Overall, the company appears to be on a solid growth trajectory, demonstrating strength in market expansion and operational efficiency. That is our deep dive into US Physical Therapy Incorporated's 2025 performance. What do you think about their acquisition strategy and that interesting detail about earnings per se? Let us know in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more corporate financial analyses. And don't forget to join our Discord community for more discussions. Thanks for watching, and we will see you in the next one.